Hello everyone, this is Prof.Dhanapal from Department of Commerce. So today we are going to discuss a topic from financial markets and institutions. So under this we are going to discuss about mutual fund. So a mutual fund works by pooling money from multiple investors and then investing it amongst different securities. As a result, it provides greater liquidity, diversification, lower risk, etc. Now easily you can understand by seeing this image. So the mutual fund company, they are getting the money from investors. So investors gives money to mutual fund company, and then the mutual fund company invests this money in different investment avenues like equities, bond, gold, money market instrument, and other securities. So this is how the mutual fund companies are functioning. They are collecting the money from the investors. So this entire money will be called as a pool of money. So those investors who are having the same kind of idea and the habits of investing the money, so they will invest their money in the mutual fund company, and then this will be invested in different portfolios. Now we look at the growth of the mutual fund. So the mutual fund industry in India started in 1963, and first mutual fund scheme was launched in 1964. From mere AUM of 25 crores is it a scale to 6,700 crores in 1988. Then during the year 1987 to 1993, the entry of public sector mutual funds set up by PSU banks, LIC, and general insurance corporations in 1987. And during the year 93 to 2003, the entry of private sector mutual funds leading to an increase in mutual fund houses. And the SEBI regulations of 1993 were replaced by a comprehensive set of regulation in 1996. By the end of January, the AUM has skyrocketed to 1,21,805 crores with 33 mutual house managing them. And then 2003 to 14, this phase is noted as the phase of consolidation due to M&As. Then it was also marred by the global meltdown. The industry lost 17% of its AUM due to the 2008 and 9 global crisis. And during the year 2014, the industry's AUM crossed the milestone of 10 lakhs crore on 31st May 2014. In less than 4 years, AUM doubled and crossed 20 lakhs crore in August 2017. Now we will understand what is that AUM, that's assets under management. So AUM of Indian mutual fund industry as on January 31, 2023 stood at 39,62,406 crore, and the AUM of the Indian mutual fund industry has grown from 8.26 trillion as on January 31, 2013 to 39.62 trillion as on January 31st, 2023. So around five-fold increase in a span of 10 years. Then these are the regulatory mechanism for mutual funds. So the SEBI will be called as AMFI, so Minister of Finance, and it goes to RBI. Then RBI will control, regulates the Companies Act, and it comes to the Indian Trust Act. Then it will go to the Stock Exchange. So these are the regulation authorities, and the asset management company will come under public trust, and then it will be run through the sponsors. So what does AMFI means? AMFI, Association of Mutual Funds in India. So this body is the Association of SEBI registered mutual funds houses and was incorporated on 22nd August 1995. So currently there are 44 members of this association that are SEBI registered as asset management companies, and the prime regulator of the mutual fund industry under the guidelines of SEBI, and they are non-profit government organization. Now the AMFI members, bank sponsored 7, joint ventures of 4, under predominantly India, then joint ventures predominantly 4 in 1, others 2, and then institutions or 2, private sectors are 35. Then the role and activities of Association of Mutual Funds in India. So AMFI is the industry association of all mutual funds operating in India. It is not a self-regulatory organization. It is a non-profit organization whose objectives are to promote and protect the interest of mutual funds and their unit holders. Right? So initial the major objectives, role of the mutual fund, they are going to promote and also they are going to protect the interest of the investors, right? And then to define and maintain high ethical and professional standards in the industry, to enhance public awareness of mutual funds, and to represent industry views and suggestions to the regulator, government, and the central bank. Then what are the role? Again, it takes directions from SEBI and ensures smooth implementation of the rules and regulations, maintaining a balance between the progress in the industry as well as safeguarding each participant's interest. With the mutual fund industry being heavily dependent on online platform, AMFI also ensures that these platforms provide ease of access and investment as well as safety and security of the identity as well as the investment of every investor. AMFI ensures transparency in each step of the transactions in the industry, thereby bringing in accountability. It is given the responsibility of ensuring that best business practices are followed by all parties involved in a trade offer through review and discussions of various rules and regulations that need to be updated from time to time. So through the issue of year-end increase in investor awareness, the AMFI ensures that the chances of fraud are reduced and the mutual fund industry functions by maintaining the highest standards set by SEBI and AMFI together. Now we'll discuss about the Insurance Regulatory and Development Authority, IRDA. So IRDA is an autonomous regulatory unit that protects the interest of the policyholder. They supervise the growth of the insurance sector in India as well as maintain a speedy expansion. Right? The IRDA has been formed under the IRDA Act in 1999 with many purpose and responsibilities conferred them. So these are the important roles of IRDA in the insurance sector. The insurance industry in India dates back to the early 1800s and has grown over the years with better transparency and focus on protecting the interest of the policyholder. The IRDA plays an integral role in emphasizing the importance of policyholders and their interests while framing rules and regulations. So here are the important roles of IRDA: to protect the policyholders' interest, to help speed up the growth of the insurance industry in an orderly fashion for the benefits of the common man, to provide long-term funds to speed up the nation's economy, to promote, set, enforce, and monitor high standards of integrity, fair dealing, financial soundness, and competence of the insurance providers. Then to ensure genuine claims are settled faster and efficiently to prevent malpractices and fraud, the IRD has set up a grievance redress forum to ensure the policyholder is protected, to promote transparency, fairness, and system conduct of insurance in the financial markets, to build a dependable management system, to make sure high standards of financial stability are followed by insurer, to take adequate action where such high standards are not maintained, to ensure the optimum amount of self-regulation of the industry. Thank you. Next, please.